What's up, YouTube? It's the Money Man here. I'm here to talk about something kind of scary to me today. That is the current state of the stock market and why it hasn't crashed yet. The stock market is at an all-time high. Every single week that it doesn't lose, if it has any gains, it's at a new historic height. Now that in itself is not that bad. It's not that scary. I mean, that's bound to happen from time to time, given inflation. But the CAPE ratio, it's the historic price to earnings over a 10-year average. It's at the third highest historically ever, at 29. The historic mean is 15. It's getting close to where it was in 1929, right before the crash and the Great Depression. The only point ever higher was the internet bubble. GDP to TMC, Warren Buffett's favorite indicator of where valuations are at in the stock market, is at 132%. Historic average is closer to like 90% and below. I'm a little scared. I gotta be honest. These valuations are really, really high. So why hasn't anything happened yet? Why hasn't the stock market crashed yet? Is it people? Is it irrational exuberance? I think it's closer to blame Janet Yellen. The Federal Reserve, its rates are still really low. Yes, they've been hiking rates in small, very small increments. But the truth of the matter is that the yield curve hasn't inverted yet. And given the pace of the rates, it may be a long time before it ever actually does. Unless something dramatic happens to the 10-year and 30-year bonds, it may not invert. So if the Federal Reserve has really been feeling this rally, quote unquote, leaving the punch bowl out, are we ever going to crash? The truth of the matter is that no one can predict that. Everyone can try to look into their crystal balls and figure out if the stock market's going to crash, when it's going to crash, what will cause it to crash. And I'm not here to try to do that. I don't think you can do that. But I think you can be worried about historically high valuations. When everything is overvalued in the market, where do you put your money? And that's what this next series is going to be about for me. It's going to be a portfolio that is prepared for this to be the end of the business cycle, however long it lasts. If the market could keep going up until the Federal Reserve, it finally increases rates over to a point where the yield curve inverts, or where the market finally readjusts. But we're going to have a defensive portfolio that's ready for this. And we're going to see how it does. Thanks for following me. I hope that you're as worried about these evaluations as I am. And as always, pay attention to what you do with your money.